the topic that we'll be taking up next or revising is Ind AS 41, which is talking about agriculture. Okay. So the scope, Ind AS 41, first of all, applies to biological assets. Biological assets we already discussed, that is nothing but your living plants and animals. If you have received any government grant related to biological assets, you call biological assets maybe as BA. So biological assets and government grants related to them, Ind AS 41 only gives the accounting treatment. And if you have any agricultural produce up to the point of harvest, then even for such assets, Ind AS 41 only will be applicable. We'll study a little more about this. However, Ind AS 41 excludes few things. Normally, Ind AS 41 is talking about agriculture things. Okay. So if you're doing any agriculture and getting a crop and all, then how should the valuation of crops be done and all? Ind AS 41 gives the guidance. But to grow a crop, you need agricultural land, no? Land and all, land related to agricultural activity doesn't come under Ind AS 41. It comes under Ind AS 16 only. Okay. If you're using tractor for agricultural activity, all the tractor will be treated as under Ind AS 16 only. Okay. And if you have any bearer plant, which you already studied, for bearer plant, Ind AS 16 only will apply. Okay. And government grant related to bearer plant, you have to apply Ind AS 20 rules. In government grant, there's a separate standard that you'll have to apply. And if you have any intangible assets which is used for agricultural activity, let's say you are using a software to check the fertility of the land, density of the land, etc., etc. So all that intangible assets will be accounted as per Ind AS 38 itself, not here. So this particular standard scope is very simple. Biological assets, okay, that is living plants and animals, excluding bearer plant, and any government grants related to biological assets and agricultural produce up to the point of harvesting only. After harvesting, you what to do, we'll talk about it, but only up till the point of harvest, this particular standard covers. Okay. So yes, agricultural activity is nothing but a process of getting the biological transformation should happen. All right. Produce. So biological assets basically simply means living plants and animals, but this plant excludes bearer plant. That is one. Okay. Third one, what is the recognition criteria? If you want to show something as an asset under Ind AS 41, if you want to call it as biological assets, one, the asset should be within your control. The very definition of asset is that only, no? That should be within your control, from which you will get substantial benefits and restrict others from getting the benefits. We've discussed all this in our regular class, right? So the asset card definition that they're talking about, that asset should be within your control. And what is the recognition criteria for PPE and intangible asset? FEB and cost measurement. Here also same, FEB. And here, no sir, it is not just cost measurement, it is fair value or cost can be measured reliably. That's one extra fitting. Asset should be within your control. From that asset, some future economic benefits should happen. And the cost or fair value of the asset, you should be able to reliably measure. So these are the recognition criteria of biological assets to be accounted as per Ind AS 41. And why are we recording this under Ind AS 41? What's so special about Ind AS 41 is the measurement. Normally, initially, all the assets, whether it is tangible, intangible, or investment property and all, you initially measure it at cost, right? Here, no, if it is biological assets, or if you are applying Ind AS 41, those assets, Ind AS 41 assets are not measured at cost. They are measured at fair value less cost to sell. Initially also, at every year end also. Initial recognition also at fair value less cost to sell. At every year, every end of year or every reporting period, you have to measure it at fair value less cost to sell itself. Okay. So suppose if you say fair value is not determinable, if you have any biological assets for which you cannot determine fair value, then the standard says you can go for cost model. So first preference is always, or first priority is always towards fair value. So always measure biological assets at fair value less cost to sell. If at all for few biological assets, if you are not able to measure fair value, then you can go for cost model. If you're following cost model means, obviously, initially you showed at cost, then go on reducing depreciation, amortization, whatever the case may be. Okay, that's the case. All right. However, for if you just check, this does not apply to biological produce. It also applies to agricultural produce. For agricultural produce, you have to compulsorily measure at fair value less cost to sell itself. Okay. Only for biological assets, there is a leeway. If you are not able to measure fair value, then you can go for cost model. But agricultural produce compulsorily at fair value less cost to sell. The reason being, agricultural produce like your corn, rice, jowar, ragi, etc., etc. These are something after producing, what do? You sell it, right? Fair value less cost to sell means what? Fair value is a market price. Cost to sell is your selling expense. For agricultural produce, which you are only selling, will you not have fair value for it? So that is foolishness. Yes or no? Something which you are selling, how can you not have fair value for it? So that's the reason standard says for agricultural produce, compulsorily you have to go for fair value less cost to sell. Only for biological assets, if fair value is not there, you can go for cost model. Okay. All right. So here is one more thing is agricultural produce up to the point of harvesting is measured at fair value less cost to sell. Thereafter, Ind AS 2 will apply. Let's say you are growing a crop. Okay, let's say you're growing wheat, right? So till you get to that wheat crop, so obviously you'll plant a seed, ultimately it will go and ultimately it will grow and then only you'll get the wheat crop. Till you harvest the wheat crop or till the farmer gets the wheat crop, till that process, you'll apply Ind AS 41 itself. That means till that stage, you'll measure these at fair value less cost to sell itself. Okay. There afterwards, after harvesting, after plucking out, what you'll do? Obviously, you may polish a little bit and fine tune it and later sell it, right? You will sell it in the ordinary course of business. That means it becomes your inventory. So up to the point of harvest, you'll apply Ind AS 41. Thereafter, you will treat it as inventory and Ind AS to apply. I mean, sir, Ind AS 2 says inventory to be valued at cost or NRV, whichever is lower. So what is cost, sir? Because sometimes all this you have to got it free also, right? So what the standard says is the fair value less cost to sell itself becomes cost for Ind AS 2 purpose. Till the point of harvest, you're measuring it at fair value less cost to sell. Let's say fair value less cost to sell is 100. Okay, there's nothing but your fair value less cost to sell up to the point of harvest. This only becomes cost. So that means Ind AS 2, this is an inventory now. No? After harvesting, you will sell it. So this becomes inventory. So for inventory valuation, you need cost. So this 100 itself becomes cost for Ind AS 2 purpose is what they say. So that fair value less cost to sell itself becomes cost for the application of Ind AS 2. Okay. So simple funda is for biological assets, measure it at fair value less cost to sell. Okay. If fair value is not determinable, you can go for cost model. If you're following cost model, then you have to depreciate and follow all the models. Okay. Agricultural produce, however, you have to go for fair value less cost to sell itself, but only up till the point of harvest. Okay. Beyond that, you will sell it. That means inventory standard will be applicable. So after harvesting, whatever is a fair value less cost to sell, that itself becomes cost for application of Ind AS 2 purpose, meaning that only becomes cost. All right. All right. Next is gains. We told biological assets are all as per Ind AS 41, the components are measured at fair value less cost to sell initially also at every year end also. Okay. So when you measure these, there will be some gain or loss because at every reporting period, let's say when you bought it, fair value less cost to sell was 100. At year end, it has become 120. So initially fair value less cost to sell was 100. Subsequently, it has become 120. Subsequent measurement 120. That means you got a 20 rupees gain. Here, no sir, all this fair value gain loss will be transferred off to SPL itself. Whatever, at every reporting period, whatever gain you get will be transferred off straight away to SPL. Okay, that's one. And here two types of gain that you need to disclose or arises. One is the physical change wala gain and price change wala gain. We'll see this with the help of one question better understood there. One is price change gain, physical change you will get, and price change wala gain also you will get. These are the two types of gains possible. Another one is government grant. We already discussed. If there is any government grant related to biological assets, then you have to account as per Ind AS 41 itself. So first for that, check how are you measuring this biological assets. Are you measuring it at fair value less cost to sell or measured at cost? Because if fair value is missing, you will go for cost. No. So first check which model you are adopting. If you are measuring it at fair value less cost to sell, okay, then check whether this is an unconditional grant or a conditional grant. Normally when the government gives some grant or subsidy, they may put some condition. Or sometimes they may give it without condition also. So check whether this grant is conditional or it has some conditions. 1 second. So check whether there's an unconditional grant or conditional grant. If it is an unconditional grant, then you can recognize this grant in P&L immediately when the grant becomes receivable. You don't have to wait till the time it is received. The moment it becomes receivable. Let's say government give you a confirmation in mail. They told that your grant has been sanctioned. It will be released in the next 2 months. Like this confirmation letter they sent you. You don't have to wait till the next 2 months. The grant has become receivable today itself. You'll receive it after 2 months, but it has become receivable today. So today only you can recognize that grant as an income. So SPL account debit to government grant receivable account, you can write like that. So if it is unconditional grant. However, if it is conditional grant, if government has put some conditions saying you have to use this asset for 3 years, 4 years, 5 years, like this, they put 101 conditions. If condition is there means, or if it's a conditional grant, then you will recognize this grant as an income only when the conditions are satisfied. No, let's say the condition is for you have to use this asset for 3 years. Then you will recognize this grant income only after 3 years, not till then. At the end of 3rd year only, you will recognize grant as an income. So this is for biological assets grant, which is measured at fair value less cost to sell. However, if the biological assets is measured at cost model, then you have to apply Ind AS 20, that is government grant. Those principles apply. We'll discuss more about this when we take up that particular standard. So this is about grant. Okay, so only those biological assets which are measured at fair value less cost to sell, that grant ka guidance Ind AS 41 gives. All other grant ka guidance you have to apply or you have to refer back Ind AS 20 itself. Okay. Disclosure is not so important. So the problem specific things, we'll take a few questions to learn a little more about this biological assets. Okay, let's start with question number 4. Moon Limited presents financial statements to 31st March each year. Okay. On 1st April 20X1, the company carried out the following transaction. They purchased the land. Okay, great. First of all, look at the requirement. What are they asking? You have to prepare balance sheet extract, P&L extract. That's all. Okay, what will come in balance sheet? What will come in P&L? Few information they've given. So land you purchased for 50 lakh. Obviously, land has unlimited useful life. So the only drama around land is, are you following cost model or revaluation model? The moment you look at it, I don't see any revaluation data at all here. I mean, straight away you can show 50 lakh in your balance sheet as land. That's what, because only if you are following revaluation model, then only extra drama will come. If you're following cost model, it's very straightforward. This is your balance sheet extract, 50 lakh worth of land. Okay. All right. Next is what you purchased the 200 cows, dairy cows on 1st April, and their average age is 2 years. These are 2-year-old cows which you have purchased, and 200 such cows you have purchased for 10 lakh rupees. By paying 10 lakh, you purchased 200 cows. That means for one cow, how much is it? 10 lakh divided by 200, about 5,000. For one cow, you have paid about 5,000. Okay. All right. Received grant of 1 million. We'll see. We'll talk about this a little bit. They've not asked journal entry. They only asked SPL and P&L extract, balance sheet and P&L extract. So hang on. So this is on 1st April. So we'll read the further information. Received a grant of 1 million, 1 million as in 10 lakh, towards acquisition of cows. This grant was non-refundable. That means what? There is no condition. Since you purchased the cows, they've already given the grant. So it's an unconditional grant. The moment it becomes receivable, you can account it. Have you already received? Yes. I mean, simply bank account debit to, or you can directly book this as an income. Bank account debit to government grant account debit to SPL account. Yes. So P&L way you can show this income of 10 lakh. Have they showed? So where is the P&L part? This is your P&L, government grant, they've shown as an income to the extent of 1 million or 10 lakh rupees. Okay, because no conditions, so don't have to wait. Immediately you can book it. Okay, next is what? For the year ended 31st March 20X2, the company had incurred the following cost. They've incurred 6 lakhs to maintain the condition of animals, food and protection. So obviously, you have to give food and other shelter and all you need to construct. So 6 lakh you have spent towards that. 4 lakh as breeding fees to the local farmer. Obviously, cows is there, means you are expecting calves to be born. So some breeding fees you pay to the other farmer. So totally 10 lakh you have spent. That is your expenditure. So comes in your P&L, other expense. Maintenance cost and breeding fees, 6 lakh, 4 lakh. You'll account it as an expense. This is your P&L, SPL extract. This is. Okay. All right. Next is what? 1 second. On 1st October 20X1, 100 calves were born. Okay. So you incurred some breeding fees, and through this procreation activity, you got extra 100 calves. When did you get? 1st October. So did you pay any money for this, or it's a natural? It's a natural activity. Yes, 100 calves you have got. There are no other changes in the number of animals during the year ended. Okay, that's all. Moon had 300 liters of unsold milk of inventory. Obviously, from the cow you are able to extract some milk. Milk was sold shortly after the year end. So the current year the milk is lying as inventory with you. Next year you sold. Okay, some information they've given. So here one you need to keep in mind is you have to keep the age factor in mind. That is very important in these sort of questions. So first, you have 200 cows, and what is their age? 2 years. Okay. At year beginning, the 200 cow average age is 2 years. That means at the end of the year, will they be 2? No, they would have become 3-year-old cows. So first come to 3-year-old cows. Okay. 2-year-old cows how much did you pay, sir? 5,000. Normally we know biological assets should be measured at fair value less cost to sell. They've not given any cost to sell data here. So I'm assuming this 10 lakh itself is fair value less cost to sell. Okay, you purchased 2-year-old cow at the year beginning. So at year ending, it has become 3-year-old cow. And how should they be measured? Initially and as well as at each year end reporting period, biological assets should be measured at fair value less cost to sell. Now the fair value of this cow is at the end of the March is 5,500. Okay, so that means this is what, sir? This is the, in fact, 1 second, hang on. Okay, 1 minute. I told no. In fact, maybe first I'll take up this. In comes to biological assets, no, sir, there could be 2 types of gain. One is due to the price change. Another one due to the physical change. Okay, I think they've called out here. Let me see. They have. Okay, I think here we can just take it. Okay, sir, initially when you bought the cow, its value was 5,000, right? Okay. Now just imagine this was 2-year-old cow only. Actually, it is not. 2 year has become 3-year-old cow. Just check if it was 2-year-old cow only, what is its fair value? Because when you bought it, it was 2-year-old only, you bought it on 1st April. What is the value of 2-year-old cow and 31st March 20X2? 5,200. You bought it for 5,000. The same 2-year-old cow value now is 5,200. That means its price has increased. Yes, no? Its price has increased. So, okay, you bought it for 5,000. Its price has become 5,200. That means how much is the price increase? Price increases 200 per cow. 200 rupees per cow. How did I get 5,200? 5,200 minus 5,000. That is the price increases 200 per cow. And how many cows have you purchased? 200. That means the total price change gain is 40,000 rupees. That's how they've got this. All right. This is one sort of gain. Another one is a physical change wala gain. So now, is it really a 2-year-old cow? No, it was 2-year-old when you purchased it. Now it has become 3-year-old cow. So 3-year-old cow ka year-end value is what? 5,500. Okay. So that means from 5,200, now its value has become 5,500. From 5,200, its value has become 5,500. This extra 300 gain, no, you're getting because due to the age change. As the age of the animals increases, normally animals are like this only. 1-year-old cow will have some value, 4-year will have some other value, 5-year will have some other value like this. Okay. So from 5,200, it has become 5,500. So how much has it increased? 5,500 minus 5,200 is a 300 rupees increase per cow. How many cows you have? 200. That means this is 60,000. So this 60,000 is a gain due to physical change. Totally, how much gain have you got? 1 lakh. That total gain you will show it in your P&L. Okay. So basically, you have to measure the fair value of biological asset with fair value less cost to sell. Yes. So when you bought it, its value was 10 lakh rupees if you want it in journal entry. Now the value of each cow, now it has become 3-year-old cow. And 3-year-old cow value is 5,500. One cow value is 5,500 and you have 200 cows. So 5,500 into 200 is how much? 11 lakh. When you bought it, you paid only 10 lakh. Okay. Now its value is 11 lakh. That means there is a fair value gain. So that means the entry you will pass is biological assets account debit. Okay. To P&L account or fair value gain, and fair value gain account debit to SPL. 1 lakh. This is the entry. Hence 1 lakh will be going into your P&L as a fair value gain. Okay, sir. That is what that 1 lakh they've got it over here. Okay. All right. Next, the same cows will you have to show it in your balance sheet. The balance sheet you will show it at what value? Value of each cow is 5,500 and 200 cows we have. That means its value is 11 lakh rupees. There's no less cost to sell them not given. That means 11 lakh will come in your balance sheet as property, plant and equipment. Okay, there's about 200 cows. Calves we have not yet received. Okay. Sir, through natural process, you got 100 calves. You received the calves on 1st October. All right. But now we are at year end. Year end, May, it is now what, sir? It is not a newborn calf. It is a half. It's about 6 months old. Do you know 6 months old ka calf? Yeah, 6 months old ka calf value is 1,300. One calf ka value is 1,300 and you have got 100. That means the value is 1,30,000. This biological assets, did you pay? No. That means directly you will pass the entry biological assets account debit to SPL account. How much? 1,30,000. 1,30,000 you should show in your P&L account. As well as same biological asset will calf value, it will come in your balance sheet also. Because you did not pay for it. So entire 1,30,000 you will book it as gain. That is a fund. Okay. And then you also have some inventory of milk. How many liters of milk you have? 3,000. That also same. The inventory up to the point of harvesting, we told what? Milk you did not buy. You got it from cows. That means this is also an agricultural produce. Up to the point of harvest, you have to apply Ind AS 41 only. And Ind AS 41 says, even these agricultural produce, you need to value it at fair value less cost to sell. Do you know fair value on 31st March 20x4? Yes, 24. In fact, they've directly given fair value less cost to sell on this. Nice problem. So fair value less cost to sell is 24. And you have 3,000 liters. 1 liter cost, fair value less cost to sell is 24. So 3,000 it will be 72,000. Did you buy it? No, you got it naturally. That means this is a gain. You have to record inventory and credit P&L account. So in your P&L account, 72,000 will come as inventory, and this is an inventory, so it will come in your balance sheet also. So that is your balance sheet and your P&L or a disclosure. That's all. It's this problem all. Okay. A simple question, just watch out because these sort of problems, no, committing the silly mistakes are more. Because once you understand, it is difficult to unlearn. So it is all the information is straight away given. You just have to take it and properly present it in the necessary places. That's all. Okay. Yeah, this was one question. Maybe let's take up one more question. Question number 6 we'll go for. XY is a farming entity whose cows are milked on a daily basis. Okay. So they breed the cows. From the cows, they get milk and they sell the milk. So up to the point of harvest, you have to apply Ind AS 41. There afterwards, milk becomes inventory for them because they're selling in their ordinary course of business. Milk is kept in cold storage immediately after milking and sold to the retail distributors, blah, blah, blah. On 1st April, we have 500 cows. All are 3 years old. Okay, here we know there is a price change as well as physical change. Okay, so there's a 3-year-old. During the year, some of the cows became sick, and on 30th September, after 6 months, 20 cows died. Sir, you had 500 cows, that is your biological assets. Now 20 cows, Papa, if they've died, means can you show the asset at same value or you have to reduce it? You have to reduce it. 20 cow ka biological asset value you need to reduce. On the same day, that is on 1st October, you purchased 20 replacement cows from the market at 21,000 each. This is the amount you have paid. You can't recognize this value because Ind AS 41 says biological assets should be measured at not fair value less cost to sell. Is there any cost to sell? These 20 cows were all 1 year old, okay, when they were purchased. On 31st March 20x2, end of the year, X had 1000 liters of milk in cold storage, which is not sold, so inventory. The market price of the milk was 20 per liter. This is fair value, but we want fair value less cost to sell. But when selling the milk, distributor X incurs a selling cost of 1. That means the fair value less cost to sell is 20 minus 1, which is 19. 19 per liter. Okay. Amount did not change. That's what they're saying. Okay. Some for extra information they've given. Fair value of the cows they've given and cost to sell they've given. For 1 year old cow, 1.5 year, 3 years, 4 year, what is the fair value on the respective dates they've given, and this is the cost to sell. Okay. So assume that fair value of 3.5 cows on 1st October is 27,000. You need to pass the necessary journal entries. So here they're asking journal entries. But before journal entries, let's get some data ready. Okay. First, how many cows did you have, sir? You had 500 cows and all were 3-year-old. On which date? 1st April 20x1. On 1st April 20x1, the fair value of 3-year-old cows 27,000. Yes, but this is fair value, mind you. This is not fair value less cost to sell. How should the biological asset should be measured? At fair value less cost to sell, right? So means we'll have this table is very important working out. First is 500 cows. They were all 3 years old on 1st April, right? Okay, fair value is 27,000. Cost to sell is 1,000. So fair value less cost to sell is these two elimination, which is 26,000. So the fair value less cost to sell of 1 cow is 26,000. For 500 cows, how much? So these two you multiply. 500 into 26,000 gives us 1 crore 30 lakh. That's what you need to measure it at. Okay, now any problem? No, this was already had. You don't have to pass any entry for this. Okay, this was already there. Okay, next what happened? On 30th September, 20 cows expired. It died. All right. That means this cows, all the cows were 500 cows were 3-year-old. Did they expire on 1st April? No, they expired 6 months later. That means these are now 3.5-year-old cows. So what is the fair value of? In fact, this cows have died. No, if they have died, means carrying amount can you increase or you need to reduce? You need to reduce. So basically 1 crore 30 lakhs, or can I say 130 lakhs? 130 lakhs is the value of 500 cows. For 20 cows, how much? 130 divided by 500 into 20. If you do, you're going to get 5,20,000. So 5,20,000 worth of biological asset you need to reduce because it has expired. So it is no more your asset now. Okay. So that you have to reduce. Okay, people. That is one. On the same day, 1st October, you purchased 20 replacement cows. But replacement cows were 3-year-old? No. All the replacement cows they said were 1-year-old. Somewhere they said no. They purchased 20 replacement cows. All these were 1-year-old. Okay, check. When did you buy? 1st October. 1st October May 1-year-old cow. This is your 1-year-old. 1st October May. What is the fair value? Fair value is 21,000. But cost to sell is 1,000. That means what is fair value less cost to sell? Fair value less cost to sell is 20,000. So you purchased 20 cows. Fair value is 21,000. Because cost to sell is 1,000. So that means each of them you will measure it at 20,000. Okay. So one is 20,000. You purchased 20. So that means that will be 20 into 20,000, which will be 4 lakh rupees. You purchased this, no? So you need to record it. So what is the journal entry? Biological assets account debit. Biological assets will be debited to the extent of fair value less cost to sell, which is 4 lakh. Yes. But can you credit bank to the extent of 4 lakh? Did you pay 4 lakh? No. They told what? You paid 21,000 for each cow. That means the journal entry you will pass is, this is the loss which we have accounted. That's fine. Biological assets account debit 4 lakh. To bank account, on each cow you pay 21,000 and you purchase 20 cows. That means you will credit bank to the extent of 4 lakh 20,000 because that is the payment you made. Okay. You paid 420, but you can recognize biological asset only at 4 lakh because 4 lakh is a fair value less cost to sell. So the difference is your fair value loss that will be transferred off to SPL. That's all. Balancing figure is your SPL. That's the entry. Okay. Whenever a cow has expired, that value you already got it over here. No, you need to reduce by 5,20,000. So what is the journal entry? SPL account debit to biological assets 5,20,000, 5,20,000. It's a loss. Loss will be transferred off to SPL. Asset value has to be reduced. So SPL account debit to biological assets 520 is the entry when the cows expire. This is about the day cow expired and the day you purchase new cows. Then what happened? Anything else? No. Next one, 31st March. Now 31st March, you need to be a little aware. Now you have how many cows? 500 you had. And that 20 you expired. It means we have 480 cows. Okay. So you purchase 20 more now. So their age is different. So we'll account it separately. You have 480 cows now and you have 20 cows which you purchase separately. Now at the year beginning, these were 3-year-old cows. And the year beginning, these were 3-year-old cows. That means now at the end of the year, these are not 3-year-old cow. It has become 1 year has already passed. That means these are all 4-year cow. Yes. So we have 480 cows. All of them are 4 years now. And we are at the end of the year. And we know at each reporting period, biological assets should be measured at fair value less cost to sell. Now check. These are 4-year-old cow. This is your 4 years. We are on 31st March 20x1. What is 31st March 20x2? What is the fair value? 26,500. Can we measure it at fair value? No. Fair value less cost to sell. So fair value is 26,500. Cost to sell is 1,100. That means what is fair value less cost to sell? Deducting these two, you're going to get 25,400. So one biological assets, we have to be measured at 25,400, and we have such 480 such biological assets. So 480 into 25,400 gives us how much? 1 crore 21 lakh 92,000. So this much should be measured at 1 crore 21 lakh 92,000. Is that okay? Okay. 20 cows ka valuation, we'll do it separately. Currently check how much is it valued at. Initially you showed it at 130 lakhs. Correct? No, initially you showed it at 130 lakhs. Then you reduced 5 lakh 20,000. That means what is it shown at? 130 minus 5.2. Currently it is shown in your books at 124.8 lakh. Yes, these two. Yes, no. This 480 cow value currently is shown in the books at 124 lakh 80,000. But it has to be shown at 121.92 lakhs. This number. It has to be shown at 121, but currently it is shown at 124. That means you need to increase it or reduce it. You need to increase it or reduce it. Reduce it. So 124.8 minus 121.92 gives you how much? 2,88,000. So 2,88,000 ka value you need to reduce on how many cows? 480 cows. So it's a loss. So asset you need to reduce means asset has debit balance. To reduce it, we will credit. So the journal entry will be what? Remeasurement loss or SPR account debit 2,88,000 to biological assets 2,88,000. That's it. This is what? Relating to 480 cows. Okay. Currently, and that's what again. Currently it is shown at this value. Alright. But you need to show it at 121. How 121? That year end ka value we've taken. This is about 480. That's all we have. No. We have 20 cows also. This also let's do the measurement. Sir, when you purchased it, these were 1 year old cows. They only told you purchased in 1st October. Okay. And these were 1 year old cow. Now we are on 31st March. So October, November, December, January, February, March. That means now it is no more 1 year old cow. It is 1.5 years old. Those are 1.5 year old cows now. And 31st March, what is their value? Fair value is 23,500. Cost to sell is 1,100. Again, same valuation. 20 cows ka, they become 1.5 years. Fair value is 23,500 and cost to sell is 1,100. So if you reduce it, fair value less cost to sell will become 22,400. One cow should be valued at 22,400 and we have 20 such cows. So if you multiply, you're going to get 4,48,000. Now these assets should be shown in the balance sheet at 448. But when you initially bought it, at what value you're currently showing? Check the journal entry. When you bought those 20 cows, you are showing it at 4 lakh. You're currently showing it at 4 lakh. You can check journal entry number 2. Currently showing it at 4 lakh, but it has to be shown at 448. That means this biological asset there is no loss. There is a gain. How much gain? 48,000. You have got a gain. So the entry is again what? Biological assets account debit 48,000. You have to increase it by 48. To gain on remeasurement 48,000. Then this gain on remeasurement will going off to SPL. Okay. That's all is this particular valuation all about. Okay. So again, just watch out for these problems. In these problems, these are very easy. Okay. But you need to practice a little bit to see. So again, keep in mind the price change and the price change part, the year physical change and price change while again you keep that in mind. There could be some mistakes going on there. Okay, there's one more question, question number 7. I'll just tell you in bits what is that. Looks fancy, but it is not. Just quickly, 2 minutes I'll summarize for you. Okay, because I'm running short in the battery there. So I'll just tell you what needs to be done in question number 7. Same drama. Okay, but what you will do is certain cows, you will sell it. Okay, in this particular problem, it's a goat wala problem. You will sell the goats. So if you're selling the goats in the ordinary course of business, then it becomes inventory. So first you will buy the goats, you will breed them, okay, you will maintain them. After a certain point of time, you will sell them. So if you're selling something in the ordinary course of business, it becomes your inventory. So if initially it was a biological assets, okay, initially it was a biological assets. The day you decided to sell from biological assets, you need to reclassify it as inventory. Okay. So you know the rule. If you have decided to sell means currently it is shown as biological assets, you need to classify it as inventory. So there are two ways to present it. Instead of present both the types in this problem only, I suggest you do this. Okay. Sir, we know this. If you want to reclassify as inventory means you need cost, but you have not purchased this. Yes. Hence, what does the standard say? Up to the point of harvest, fair value less cost to sell. So you will pass the inventory shown in your P&L under what category? Cost of sale. You can directly write inventory or our study material writes cost of sale. So cost of sale account debit. Cost of sale you recorded at fair value less cost to sell. Okay. Then you can't show it as biological assets anymore. You have to derecognize it at carrying amount. The balancing figure you transfer it off to SPL. That is your remeasurement gain or remeasurement loss. This is one way to approach it. Okay. This is approach number 1. Or approach number 2 is on the day it is classified as inventory. Classification change date. Can I write? Classification change date, meaning from the day from biological asset became inventory. That is your classification change date. That day, measure biological asset at fair value less cost to sell. Biological asset itself, you measure it at fair value less cost to sell. Currently, it is shown at some other carrying amount. From some other carrying amount, bring it up to fair value less cost to sell. That means you will get some gain or loss. So the journal entry will pass as biological assets account debit to fair value gain means SPL, or if it's a fair value loss means SPL account debit to biological assets. If you don't want to use SPL, you can use fair value gain or loss. This could be either this or this is for gain. If it's a loss, you'll write SPL account debit to biological assets. Okay, this is for the loss. So by doing this, what happens? You'll get biological assets at fair value less cost ka platform. Then from biological assets directly classified as inventory. So that means the journal entry will be cost of sale account debit to biological assets account. You can pass like this. This is what this approach study material is following. Okay, even if you pass like this, the entry will be same. Okay, this is one. This is the first. Some goats you would have done this. You have to reclassify it as inventory. That's what happens in this particular question. This question is also there in your ICA study material only. Good question. Okay. Another one is some goats would have got slaughtered. Okay, so obviously some people want goat ka meat also, right? So your business is also like some goats you will sell it, okay, or some goats you'll slaughter it and sell the meat, whatever. That could be your business. We don't know, right? Okay, battery is low. Okay, let's try to quickly finish. So if you are doing any slaughtering cost, okay, so same drama, this approach. For slaughtering approach, they are following this. Okay, for inventory, they're following this. For slaughtering approach, they're following that. I believe whatever you follow, and final answer should be same. It doesn't matter. Okay, so slaughtering cost means again, sir, this again you're slaughtering and you'll sell the meat. That means it becomes your inventory. So you debit inventory and you'll debit inventory, you know, obviously. Inventory should be valued at fair value less cost to sell here. So inventory will measure it at fair value less cost to sell. To what? Since it is no more a biological assets, it became your inventory. De-recognize biological assets. Biological assets, they will de-recognize it at carrying amount. Whatever is the carrying amount, de-recognize it. Okay. Then if you're slaughtering means they would have incurred some slaughtering cost also. Obviously, you need to hire a butcher and pay him some money and all. So there'll be some slaughtering cost. So credit bank account. This is for your slaughtering cost. Okay. The balancing figure is your SPL. Doesn't matter whether it can come on the debit side or on the credit side. Whatever is the balancing figure, you will get. You debit the SPL for it. Okay. If it's a loss, you'll come on the debit side. If it's a gain, the SPL will come on the credit side. Whatever. I think in this problem, it's a case of a loss. Okay. You can arrive this as balancing figure. Okay. So they are following this approach. For approach number 1 for the slaughtering wala done. Okay, that's what you need to do in question number 7. Keep this in mind, okay, and pass that question number 7. I mean, solve that particular question, go through that particular question. That is a good question as well. So in the now, probably because of this battery wala drama, I have only 5% remaining, so I'll not be able to take care of that question, but this is the same thing only. Okay, and that is also a good question. Okay, so this was your quick synopsis on Ind AS 41 agriculture. So thank you for today. I think we will wind up for today. So we'll catch up tomorrow at the same time. Okay, take care, people. Thank you. Bye bye.